There once was a swagman camped by a billabong under the shade of the coolabah tree, and he sat as he watched and waited till his billy boiled. You'll come a waltzing Matilda with me. Good morning, ladies and gentlemen. This is Arnis Luks at thecrossroads.org, and we've got an interesting day today. We have three guest speakers, and I'd like to introduce them to you. First, former Mayor from Port Lincoln, Mr. Peter Davis. Welcome, Peter.
Thank you, Arnie, and good morning to all of our forum.
And from Canada, Wallace Klinck. Welcome, Wallace.
Yeah, good morning to everyone.
That's it. And also a former Mayor of Narracourt, Mr. Ken Grundy. Welcome, Ken Grundy.
Thank you, Arnie. Nice to be on board again.
That's it. Right. Now, the forum we've planned for today, money creation in the modern economy. Now, I know that Peter Davis gave a very good lecture last October in Adelaide, and it had the history of the East-West Railway line and how it was financed through the infant Commonwealth Bank of Australia, the People's Bank. It was referred to as the People's Bank, and it had a particularly colourful history of politicians and directors who did some amazing things in order to make that bank work for the Australian people. And the outcome of 12 years of basically stable financial, community-orientated financial policy for the benefit of Australia as a whole and the Australian peoples as individuals. The financial policy served Australia well, and Australia came out of the First World War debt-free, and significant infrastructure was constructed across that period of 1912-1924. And so to me it's vital that we revisit this question, especially in light of that Australia is proposing to hold a Royal Commission 2018 into banking and finance, and I know that the terms of reference are very restrictive. At least that's my understanding of the document that I've looked at, and so I believe we should look back in history in order to go forward. So Peter Davis, I'd like to welcome you to the floor.
Thank you, Arnie. It's hard to know where to start because the system is so complex and so all-encompassing, but where is a start? To me, your Waltzing Matilda introduction is a wonderful starting point because that swaggy was camped by the billabong underneath a coolabah tree because he was a consequence of the Great Depression, as Banjo Patterson conveyed. Now, that means about 1930, which is about 6 years after private financial interests initially began their control of the amazing Commonwealth Bank of Australia, which had been created back in 1910 by, I'll call him an American larrikin, King O'Malley, who had been a real estate agent and a banker in America. And he understood the creation and control of credit, which, whether we like it or not, for all intents and purposes, is in private, massively wealthy private hands worldwide. Now, Arnie, shall we literally begin with the beginning of the Commonwealth Bank, how Andrew Fisher's Labor government, of which King O'Malley, who incidentally, when he arrived in Australia, was elected to the South Australian Parliament to represent the seat of the Fleurieu Peninsula, and he eventually, or shortly afterwards, he lost that seat. He then went to Tasmania and campaigned on the west coast of Tasmania, and against enormous odds won the seat of Denison on the west coast of Tasmania and entered the first federal parliament and began his campaign to free Australia from the tentacles of the Bank of England and its various other tentacles, I'll call them. And the consequence was that in 1912, the Commonwealth Bank of Australia legislation was passed. Now, since yesterday morning, I've read his speech delivering his concept of the Commonwealth Bank of Australia, which was accepted as the legislation for the creation of the bank. Now, I told your viewers yesterday that the initial capital of the bank was £12,000. That was incorrect. He formulated the capital of the bank thus, that 12,000 shares would be issued, 6,000 of which would belong to the Commonwealth government, and 1,000 shares each to the 6 states of Australia, thus a total of 12,000. Each of those shares cost £100 each. You multiply 12,000 by 100, you get £1.2 million. Now, using the banker's rule of money at 7%, doubling every 10 years roughly, and I explained the rule of 72 yesterday, and I haven't bothered to figure out from 1912, well, it's 10 plus 1 is 11. If you double £1.2 million 11 times, and you probably get something like, I don't know, might be 100 million, might be even more, we got to double it for a start to get dollars, thus 2.4 million, and double that 11 times, that will give us roughly the opening capital, and on which Sir Denison Miller in the next, he died in 1923, but by then his bank, the People's Bank of Australia, and it is significant that the head office branch in every of the Commonwealth Bank in Australia, every head office in each state was in the federal government's post office building. And he saw the wisdom of utilising every post office in Australia as a banking centre for the CBA. Wonderful concept. Saved a lot of money too in those instead of pouring money into bricks and mortar. He had the more flexibility to create loans and build the nation. How did he build the nation? Well, the First World War came along. Because Fisher agreed to fight the First World War on behalf of Great Britain, he went to English bankers. They offered money at 7% or 7.25% or whatever. Fisher rejected that and went to Denison Miller, who created the necessary finance at around less than 0.5%, made a profit on the deal and created no national debt, £340 million worth. One issue. Amongst other things along the way, he funded the creation of the Commonwealth shipping line, the Australian woolen mills, Australian amalgamated wireless, and perhaps you mentioned, Arnie, in your introduction, the transcontinental railway line, which is another. Out of the profits of the note issue that when he was organising the payment of the workers on the railway, the fettlers and the whatever you call the various tradespeople building the steel line, they had this wagon in other words, the post office branch, which had the pay packets to give the workers out in the deserts of Western, the Nullarbor Plain. The teller in the front wagon would pay the money out to Billy the Goose, who'd just been banging in, whatever they call those pins that hold the railway line down. If the bloke would get his money, he might keep, 10% of his wages to get on the grog that night, and he'd pay the money back in and bank it to pay for his family back home in Adelaide or Westerners, Perth, Kalgoorlie, wherever. And out of the profits on the printing of the notes, and Denison Miller paid for over half of the cost of the construction of the transcontinental railway line. Compare that. In other words, no debt for the nation. Today we've got Malcolm Turnbull and various other people. Barnaby Joyce, thinking about building a high-speed rail link from Melbourne up to Brisbane. It's going to cost $8 billion and they don't know how to fund it. Why don't they know how to fund it? Because they're going to have to go to the private banking sector. Thanks, Arnie.
Yeah, no, thank you, Peter. And it's a good starting point that the establishment of the infant Commonwealth Bank was sufficient to build our infrastructure, build significant infrastructure in Australia, and to finance the First World War. Now, I'd like to draw people's attention to our ALOR library, because the historical documents are there for us to look at, and if you go to the library and you just work your way through, you'll see that we've got the story of the Commonwealth Bank over here to the left under Amos, and you've also got the Bank of England reports money creation in the modern economy, which is most important, and also if you move further down, you'll see the Banking Royal Commission 1937. These are the copies of the official documents, copies of the documents that are most important if people want to start to gauge some idea of the rich history that we've come from, and how Australia, through its independence, have its independence by having its own bank, a people's bank, where the policy of the bank was to pursue the benefit of the community, not the profits of the individual shareholders of the bank, and that's completely different to what's going on today. Now it's exploit at the expense of the communities, and bank profits are astronomical. I think Peter's explained that the Dennis and Miller was able to garnish significant profits at very low interest and finance some enormous infrastructure for Australia at the time in that 12-year window. So I think, to me, that's very, very important for us to at least lay the groundwork and say, well, hang on, if we can have a community bank, and the policy of the bank, the financial policy of the bank is to pursue the benefit for the community rather than the profits for the shareholders, then that changes the relationship of what's going on. Now, I'd just like to bring readers' attention to another document here, and that is, we've got it on the website, it's Money Creation in the Modern Economy, which is really in a sense, the theme for today. And that money creation in the modern economy talks about how when a bank makes a loan, this is from the Bank of England, this particular document, Quarterly Report 2014, when a bank makes a loan, it's an issue of new credit. And the credit itself, through banking accountancy, will go in one account as a credit. But in your account, if you're the person taking out the loan, it's also presented to you as a loan, and generally significant loans are mortgaged in one way or another, whether it's a vehicle or a house. Especially a house is mortgaged, and that means that the assets actually remain the property of the bank until such time as the loan is cleared and the mortgage is removed. And I think this is vitally important that we come to grips with this, that the work that Dennis and Miller and O'Malley were doing in the 1912-1924 period was they were making loans 0.5% interest, 2 payments annually for 30 years for, sorry, not 0.5%, that's incorrect, it's 2.5% interest for 30 years for home mortgages, and not exploitive but rather sustainable for individuals to work through so that they had the opportunity to own their own property. I think that, to me, is very, very important in our attempted assessment of why is money creation so important. Independence, money creation, property, they really are interrelated. Now, I'd like to give Wallace Klinck an opportunity to enter into the forum and give his thoughts of the history of Canada and also any other pertinent points. Wally.
Well, of course, we went through the usual trials with the Depression and so on, and that's when social credit really made its very big progress, or large progress in this country, and resulted in a social credit, with quotations, government being elected in the province of Alberta with a massive sweep. It literally decimated the United Farmers government that had previously been in office. And there was a lot of ferment, a lot of education, a lot of genuine interest, study. Groups were set up all over. And then, of course, as we mentioned before, the attempts to pass legislation along financial lines to enact social credit policies was all disallowed by the federal government and the Privy Council. And these efforts went on for some time to no avail. And eventually the government simply became a conservative government and dropped the social credit position with the premier who followed Eberhard. Eberhard was certainly had his heart in the right place, and he was determined to do the right thing. And he had some members of the government who were impatient with the lack of progress that was being made, and they challenged the government. And of course, Douglas had sent Dennis Byrne and another advisor over from Britain to advise the government, but their efforts did not produce any really definite results because of the opposition from the banks and from the federal government. So that's kind of we had a federal movement too, of course, a party, and actually at one point I believe they had, I think it was 36 members in the federal government, which was quite a substantial showing. But again, it just simply didn't work out, and they lost their seats, and so now we have none at all. And that's more or less the story of what happened in social credit in brief, in a nutshell, in this country.
Mm-hmm. Thanks for that. Thanks for that, Wallace. I appreciate where you've taken us with the struggle that Canada has had, and Peter has highlighted the struggle that Australia has had, and this struggle is ongoing. It's not going to go away. And the fact is, if you look at the power of banks over nations, it's absolutely formidable. And if we don't consider this power and start bringing it back to order, then we have no chance as a people to be a free people. Now, Ken, over to you.
I'd just like to raise one point. It was probably mentioned more so yesterday, but how the banks actually create these loans from nothing. And I think a lot of the people in our audience today would probably find that, a fairly broad statement and difficult to accept. So there's a very simple way to prove that they don't lend the deposits, and that is for you to look at your account. So if you like open a special account, you could put $1,000 in it and go along every Wednesday and ask the teller, what's your statement showing, and it'll still show that $1,000. And so you can ask them after 1 month. I've been in here every Wednesday since I opened this account, and there's no sign of anything being lent to other people. So what's going on here? And that'll put them on the spot, and it'll prove to you that they are not lending out your deposit.
Thanks for that, Ken. I agree with you. Now, the ALOR library has this document from the Bank of England. I brought it up before, Money Creation in the Modern Economy. And if you take the time to download it, print it out, and go through it piece by piece, you'll realise that each new loan is an expansion of the money supply. It is new credits, and it is created from nothing by the banks. And the fact is that when a bank creates money from nothing, what it's doing is it's actually claiming that money as its own asset, and it isn't, because new monies coming out actually mobilise the community in order to perform work, useful work. So by rights, new credits should belong to the community, not to the banks as they claim their own. So in my view, that's sleight of hand, that's shenanigans. Yes, Wallace.
Well, yes, I think if you talk to the average citizen, most people don't really realize that banks create money. They think that deposits exist and they handle money and from day to day, and that's the way it is. But I think if you talk to a lot of business people, and certainly people who have taken any courses in economics, they're well aware of the way the banks create money. However, as you just alluded to, the ownership of money, they do not understand that aspect of it. Money does not grow on trees. It's not manna from heaven. Money comes into being. How does it come to exist? It's got to come from somewhere. Banks do not lend their depositors money. Banks create credit and destroy credit. They're creators of credit and destroyers of credit, or cancelers of credit. And that's their business. They are not borrowers and lenders of money. we need money to function. What they do is they monetize. They perform an accountancy function by monetizing the wealth of the community. If it's for production, what they do is they will issue credits to allow the producer to draw upon the real productive assets of the community in order to provide a service for the community.
Thanks, Wallace. That's exactly right. And I'm going to put Peter back here because, Peter, we talked about the infrastructure projects under Sir Denison Miller and how productive that was for our nation, not only to execute the war effort, but also to build the East-West Railway line, the Commonwealth steamships, the Commonwealth oil refineries, the Commonwealth woolen mills, enormous expansion of Australia infrastructure, and debt-free. And I think those are vitally important because at the moment our politicians are talking again about selling our assets, debt for equity swaps, equity in our assets, even our national parks, our huge resources that we've got out there, handing it over to the banks because of this ability of banks to create money out of nothing and then claim that money as their own asset. Now, I think that's absolutely vital that we focus in on this point as to what Sir Denison Miller and O'Malley and the Bruce Page government did on their day. So back to you, Peter.
Well, again, Arnie, the subject is so all-encompassing and well, we're dealing with a hydra-headed octopus, and it's difficult in relatively short interviews to convey, let's say, the guts of the argument. The fact of the matter is that for 5,000 years, this control of the creation of credit and how it is repaid, it is as old as history. And it's the battle between, if you will, Jesus, I think it's verse 12 of Matthew's, the Lord's Prayer, Matthew chapter 6, where he said, "Forgive us our debts as we forgive our debtors." Now, the one thing that a private bank will never do is forgive its debtors. People need to understand the meaning of the origin of the word mortgage. It consists of two syllables, mort, as in death, a mortician or a mortuary, and gage, that both are ancient Latin. Mort, death. Gage is Latin French, comes from the verb engage, to engage or to grip. That's the real meaning of the word mortgage, is death grip. Now, if we take the creation, what Denison Miller did, he did not impose a death grip, a mortgage, on the infrastructure that he was financing. The infrastructure belonged to the people of Australia via the People's Bank, the government, and because the rate of interest was peanuts, there was no death grip. But today we've got a deal going where, if we look back over the last, in Australia's case, 30 years, less than that, 20 years, every government in Australia has been involved in selling off its assets, the people's assets, to borrow more money to keep daily activities going, to the point where today in Australia, our federal government is borrowing, that is mortgaging our future, from the private banking sector via the Reserve Bank of Australia, which certainly the Reserve Bank belongs to Australia, the people of Australia, via the government, but the control of it is in private hands. And those people dictate, the amount of credit that is created, as Wallace has just described, out of thin air. It comes in as a deposit in the bank's hands initially. It's then lent out to the borrower. Right now, Malcolm Turnbull, our current Prime Minister, I've had a meal with him. He's a charming man. He is a Goldman Sachs senior executive of a few years ago. He is a private banker. He is currently borrowing on a weekly basis $100 million. That is $1 billion every 10 weeks to keep the nation going. He is building our national debt, never mind private debt, at the rate, it's in tens of millions annually. Tens of millions. When Tony Abbott was elected Prime Minister, I don't know, 4 or 5 years ago, the then national debt stood at $253 billion. Today it is $500 billion, and we're doing better than you in America. I'll call you Canadian, part of America, Wallace. America's national debt, the interest on America's debt is now over $1 trillion. It's totally unrepayable. The banks love it because they are enslaving the people. That's happening to us too.
Thanks for that, Peter. And I think a vital point that an entire nation can be gripped by this debt burden to the point where they're bankrupt and they're incapable of working their way out. It doesn't matter how much they produce. It doesn't matter how hard they work. They will never, ever clear the debt. It's irredeemable. And that to me is absolutely vital that we come to grips with this. Why is this issue so important? Because it's about freedom. It's about yours and my freedom and your children and grandchildren's freedom. If we can't sort this issue out as part of a concerted effort to restore order to our community, our politicians aren't doing it. And so it comes back to us to re-energise our commitment to consider freedom as the first cause. And I see Wallace wants to add some more, so up to you, Wallace.
Money is an instrument of power. It should not be an instrument of power for those who create it. It should be an instrument of power for those who spend it. Bankers tend to be deflationists because by being deflationists, they restrict the supply of money. They regard money as a commodity, which they sell, and they want to maximize the value of that commodity. So they tend to want to keep it in short supply. Money, however, should only be a reflection of what we can do and wish to do. In other words, if we have resources, money should always be available to activate them. And there should never be a shortage of money. As we said yesterday, to speak of a shortage of money is to speak of a shortage of miles, of pounds, of ounces. It's absolutely insane. It is completely divorced from reality. We do things and we should not be inhibited or stopped from doing them just because of a lack of figures. And that's what it amounts to, because of an abstraction, which we call money. So.
Thanks, Wallace. Ken, you're sitting on the sidelines there, and I know that you're a thinking man, and I know you want to contribute to this conversation, so I'm going to put you on the spot. Ken.
Well, Arnie, so far we've learnt of the wonderful facilities that the banking system can provide, and it's come down to the fact that it's either going to be for good or for evil. And we're certainly not seeing the good that Peter Davis has clearly outlined that we saw in previous times. So maybe it's not for now, but before we close this session, I think we should have a little discussion about how we're going to get back to having the banks doing good.
That's a very good question, Ken. I know that that there are some political representatives, if you like, the best that they can as representatives. Corey Bernardi mentioned about this cashless society and the fact that this may be the end of, if you like, printed coin in Australia, and I find that fascinating because a writer immediately wrote to him and highlighted that it's the responsibility of the federal government as directed by our constitution that they're responsible for finance and credit, not only just minting but the entire monetary process for the community, and it is for the benefit of the community, and for them to hand it over is just completely unsatisfactory. So I think at the first point you ask a question, where do we start, what can we do? Well, the first thing in my view is we've got to look back in history and have a look at what has happened, what has transpired before, in order to set our anchor, set our roots down, and then say, okay, this is where we go from. And so I'd like to highlight our viewers' attention to the ALOR library in regard to where I am here with the mouse. I think you can see it. Yes, you can. This is the 1937 Banking Royal Commission documents, the findings. Now that Banking Royal Commission is a completely different terms of reference. I say that without knowing it, but only because I read the terms of reference for the current Banking Royal Commission, and that's more to do with dodgy operators selling, what would you call it, a financial product. What is a financial product? It's just it's different forms of debt, different forms of accepted debt for people, financial products. And so the end result for the Commission is probably known by the banks, because the banks were the one who very quickly jumped on this. If we have to have a Royal Commission, this is the shape of it. This is the terms of reference. And our former banker, now Prime Minister, was very quick to accept and say, okay, we'll spend 75 to 100 million of Australian taxpayers' money on this, but the outcome is basically predetermined, and that is that some loan officers will get a bloody nose, but think the caravan will move on. Well, I highlight to our listeners and our readers that on the ALOR Library website, you'll find the outcomes of the Banking Royal Commission 1937, well worth reading, and especially I found the dissenting view by Chifley. Chifley points out that his point of view was that the purpose of a central bank is for the benefit of the community, and you can't have the central bank's policy as derived simply as profit for the shareholders. It can be so destructive if that's all it is, because you exploit to the point of bringing them to bondage, and that's not what it's about. I mean, if we get to the point where industry, I mean, notice Australia is now going to sell armaments, and it's going to start making profits out of selling armaments. I mean, is that the sort of financial policy that we really want to sit on, that we've got to blow up someone else, we've got to blow up the world in order to put butter on our table? Because that's the actual outworking of it. It's horrendous, it's hideous. So the first thing is to arm yourself. You've got to, what is the work that I must do in order to begin to understand what I can do? And you've got to target your politicians. You've got no choice. They're the only ones that are there, but you've got to put sufficient pressure on them, and especially a pressure about what can be achieved, what has been achieved, in order for them to yield. And that won't come easily, because politicians only ever yield to pressure. So I hope I've started to answer your question, Ken, but I know it's a big question, and it will be an ongoing question for all our listeners. What can I do? Well, because there are things that you must do. And the first thing is to arm yourself, and then start putting how you arm yourself into practice. Over to Wally. Wally.
I noticed you quoted Sir Jose Stamp, the former director of the Bank of England, when he said that the caravan moves on. In other words, we have to arrange that the caravan moves in our direction and not in the direction that the banks are steering it. But I think that what we have to understand in reality, initiative, creative ability, is something that is protean. It's all over. We don't know where it is, but it's all over. It exists within human creativity and imagination. And we want to be able to activate that without interference from an external source. Now, when they talk about placing the ability or the right of creation of credit and coin and so on with the government, I think that's a very, very dangerous thing. And I'm not sure the politicians really understood what they were doing when they were talking that way. Coin and bills are just simply tokens that can be used to exchange for credit. If you want to have some coin or credit for convenience, for small purchases, you go to the bank and you ask them to give it to you, and they will give it to you without argument, but they will deduct your account. And when you return it, they will reimburse your account, and they will demobilize that coin and credit. It is no longer purchasing power. So what we want surely to do is to make sure that when anyone, if I have assets, surely I should be able to write a promissory note pledging those assets for resources that I can obtain from the community so that I can engage in a creative or productive activity for the benefit of the community. I do not want to have to run to the government and get permission to exercise my creativity, because that is centralized control. We want to make sure that the resources, the financial resources, are always available to those who have something to offer the community. And we don't want some external authority dictating whether or not that person or that group of persons can actually engage in their project, because that would simply make a static society, or a society dependent upon the leave or the permission of those who control the issue of credit. So it should be decentralized, and I think that's something that we have to recommend. The real problem is that there's a scarcity at the consumption end, and that gives the banks the power to dictate the policy of production. Because if there's a scarcity of purchasing power, you have to engage in some other activity in order to obtain the purchasing power to make up that difference so that you can buy the goods in question. And if the banks have the power as to whether or not they will issue the credit to allow you to exercise that creative ability.
Thanks, Wally. That's a vital point. That credit creation, if it is vested in the hands of a centralised government, is just another form of tyranny, and I think that's absolutely essential to understand that. That yes, we do want to return the autonomy of banking to the benefit of the people, and that is a policy we're talking about. And as to the outworking of the policy, which is what Wallace is talking about, that has to be based on that it's for the benefit of the community. I'm going to cut across to Ken, because I see that Wallace wants to come back again. Yes, Ken.
Yes, I suppose, Arnie, my query as to what we're going to do about it, and you and this forum is really very important, in as much as educating our audience, and the audience can take it further. But I wanted the point to come out that really we have to motivate individuals, because the only solution is going to be when it comes from the grassroots. Now, we've got the big problem of the Joe in the street says, well, what can I do? And they're largely demoralised because the politicians have been ignoring every wish we have. So we've got to motivate them. But I suppose we can also, try and get the point of view over to chambers of commerce or industry leaders or union activists and these sorts of people. But the other point that I wanted to really come out of it was that we don't want a political party formed with this goal in mind.
Thank you, Ken. That's it. That again, very good point. There's some solid discussions going on here, because if we hand power, I notice in Australia we've got this Conservative Party putting its hand up and making noises, and I also note that in South Australia we've got this Xenophon fellow making noises, and I don't see hope in either of them, because if they're not going to actually start putting in policy that brings about betterment for the individual, then it's pointless. They've missed the mark. Wally, I noticed you wanted to add some more.
Probably forgotten exactly what I was going to say, but I would say this. I do not think that the idea of a central bank setting interest rates in order to control the availability of credit is a good thing at all. It is centralized control, and it's not the basis on which credit should be issued. As I said before, credit should be issued on the basis of creativity as it exists, not as the central bank wants to define it. They change the interest rate, the prime rates, in order to try and alter the availability of credit. And that is not a proper basis. The availability of credit should be dependent upon the availability of goods, of resources, actual material resources, psychological and physical resources that are available to produce any given program of production. And So I think that we have to get away from this idea of the central bank as a centralized instrument of economic policy. And of course, it is definitely exercised in order to allegedly maintain near full employment, not absolute full employment, but near full employment. And the purpose of an economy is not to create work. In fact, it's to get rid of work as fast as possible. We want to be efficient. We have an objective that we want to achieve, and we want to do it in the most efficient manner possible. And if that means completely eliminating labor as a factor of production, well, so much the better.
That's you've taken us a long way along the road, Wallace, with that, because what you're talking about is the ramifications of automation and technology, advanced control. And these things, of course, are labour-saving devices. I mean, when the first Stephenson rocket, mobile steam energy, was introduced into the labour pool, it undid a lot of work that people historically did. And the Luddites, I think, went around smashing the machines because they could see that their income, their livelihood was being destroyed. And it gets to the point where automation is projected to take over 50% of current jobs. I mean, doctors, lawyers, all these sorts of things. They're trying to get automotive cars to drive themselves. Straight after that will be trains, planes, ships. It goes on, and it gets to the point where, well, if machines are going to do everything, where do people get an income from? And if there's no people, if there's only a quarter of the people working, the income isn't going to come from a tax pool. It's not going to come from a tax pool because the quarter of the people working, you're going to beat them to death by taxing them to death to supply an income to the rest. We have to look outside the square. Our situation is unique in the history of mankind, and we have to look out the square and start taking things into account. A new financial system, that's what we've got to look at. Wallace Klinck.
And can you imagine the insane society that we would live in if we spent our efforts trying to find new things for people to do when there was no need for them to do it? I mean, it would be an absolute madhouse.
That's it. I agree, Wally. Thank you. I'm going to bring us to a close, but before we close, I noticed Peter put his hand up. Peter, it's been a very interesting discussion. Thank you for bringing this topic up to us. And have you got anything more to say?
Yeah, I have, Arnie. You opened this discussion by talking about history, and there are two outstanding historical examples of, contrary to what Wallace's concern is about central banking, government control, transfer of credit creation, the two outstanding examples of benevolent credit creation. One, Sir Dennis and Miller's Bank, which was answerable to the Commonwealth Parliament, his, whatever it was, 12 years of amazing benevolence for Australia with no national debt. The other absolutely incredible example is what Abraham Lincoln did for America when he was fighting, the Yankees were fighting the Confederates of the Civil War. It did get him shot by William Booth, but Abraham Lincoln created, because when his ambassadors went to Europe to seek credit from the private banking sector to continue fighting the Confederates, the ambassadors conveyed to Lincoln that yes, the banks were prepared to extend credit, but because it was a risky venture, the interest rate would be between 24 and 36%, to which Lincoln replied that was unacceptable, and so he decided to print his own money, which he did, and it still exists, the American greenback, until, in fact, the private banking sector on the 23rd of December in 1923, Congress passed a resolution creating the Federal Reserve System. Today, if you look at any American greenback note, you will see printed across the top, Federal Reserve Note. That note is part of America's national debt. But historically, Lincoln proved 50 years before the example of Dennis and Miller's Commonwealth Bank of Australia, that yes, there can be a benevolent central banking source. Thank you, Arnie.
No worries. Thank you, Peter. That's over to Ken. Ken, closing comments.
Only your remark a while ago that, hypothetically we could be coming to the stage where 25% of the population are funding the other three quarters through taxes. And I mean, this is absolutely fertile ground for what we've been talking about to be brought into fruition. So in our audience, people who think this is a difficult subject, they must be motivated by the fact that it is more needed now than it's ever been, and the time is right.
Thank you, Ken. And closing comments, Wallace.
Well, with regard to Lincoln, it is true that he did this, but of course it was centralized government policy, and it was in the pursuit of a dreadful experience in American history. It was a bloodthirsty and inhuman war that was being pursued, and it was being pursued by the government. Governments, when they make mistakes, can make really big mistakes, and if you give them control over the resources of the community, it can be a total disaster. So I wouldn't call it benevolent.
Okay. Now I'm gonna bring it to a close on that. I appreciate all of your input today, gentlemen. Thank you so very much. I'm just going to take us back to where our document repository is. The ALOR library is going to hold most of the documents that we just discussed today. I might point out that the dissenting view for the Royal Commission is there, as is the story of the Commonwealth Bank, as is the quarterly report for money creation in a modern economy. So thank you very much, ladies and gentlemen, for coming to thecrossroads.org today to listen to this money creation in the modern economy, and especially thank you to our speakers. Thank you, Peter Davis.
Thank you, Arnie, for having us.
Our pleasure. And Wallace Klinck from Canada. Thank you, Wallace.
Very pleased.
And our friendly narrow court farmer. Thank you, Ken Grundy.
Pleased to be with you.
No worries. All right, ladies and gentlemen, that's our show for today. We'll be back again. We might have a week off next week because I'm behind in documents. So I look forward to catching up to you the week after, third week in February. So this is Arnis Luks signing out. Once was a swagman camped by a billabong under the shade of the coolabah tree. As he watched and waited till his billy boiled, you'll come a waltzing Matilda with me.